Settlement statements provide clear documentation for all the debits and credits to both the buyer and seller on the transaction. In layman's terms, it summarizes all costs owed by the buyer and credit or proceeds due to the seller. It is an essential document for both the buyer and seller as it provides transparency regarding the financial aspects of the transaction and ensures that all parties are aware of their financial obligations and rights at the time of closing. So let's break it down. You'll see transaction information at the top of page 1. Below that, you'll see all the fees, titled debits, and all the credits for that transaction. The seller side is on the left, and the buyer side is on the right. Fees are broken into sections. Primary charges and credits will include the sales price, down payment, loan amount, and any credits given by the seller. Prorations and adjustments will include the property taxes, which are prorated to the closing date. Property taxes are due twice a year, so depending on when the closing is and when the closing was paid, it's likely there will be money shifted around to prorate for these. It will also show other prorations in this section, like homeowners association dues. The loan charges section shows all fees associated with the buyer's loan. These fees come from the lender's closing disclosure. The buyer was able to see these fees on that document, and they will be the same on the settlement statement. Impounds are accounts that get set up to collect money that will be due in the future. The two main types of impound accounts are homeowners insurance and property taxes. The lender typically collects for both, which is included in the buyer's monthly mortgage payment, and then they pay them annually or semi-annually. Under payoffs and payments, you'll find the payoff amounts and fees for the seller's current loan. The reconveyance fee covers the recording of the document that removes that loan from the property at closing. The recording fees and excise tax are government fees that are charged. These go back to the county and municipality that the property is in and are owed by the seller. The excise tax fee is a tiered fee that is based on the sales price. Commissions are also known as broker compensation. After this section, you'll find the title charges. While the entirety of this section is called title, escrow fees are also included here. The final section is miscellaneous charges, and it will include estimated utilities, HOA dues, homeowners insurance, and other fees. Utilities will always be estimated as escrow is not able to get up-to-the-minute current charges at closing. They are charged to the seller, but anything the seller paid over that was actually due will be paid back to the seller after closing, once escrow confirms the amounts owed. All these debits and credits add up to the bottom of the settlement statement, where you'll see on the left side how much proceeds are owed to the seller, and on the right side how much funds are needed from the buyer to close the transaction. The settlement statement can feel like a lot of information for buyers, sellers, and brokers. But the good news is everyone receives it for review prior to signing day. The seller can receive their settlement statement within a week of closing. The buyer is usually on a tighter timeline. Escrow needs the closing disclosure from the lender showing the final loan fees, which then get added to the settlement statement prior to finalizing it. It's really crucial for all parties involved to review the settlement statement once received. If anyone has concerns or questions, they should reach out to their escrow team as quickly as possible to discuss. Reviewing the settlement statement ahead of your signing appointment enables that appointment to go smoothly, as most questions will have already been answered. The seller can sign at any time after receiving the settlement statement. The buyer must wait 3 days after receiving the closing disclosure from their lender before signing. Oftentimes, this puts the buyer signing appointment within a day or two of closing, or even the day of closing. Signing appointments can take place in any escrow office, or a mobile notary can be requested to meet clients at their home. On signing day, both the buyer and seller must bring their photo ID. They will sit with the notary and sign their closing documents. Once the appointment is finished, the escrow team will check the documents and continue towards closing. The settlement statement should be reviewed by all parties, both buyers and sellers, and brokers and lenders. This will ensure everyone is on the same page on signing day. Be sure you're reaching out early with questions. Escrow is here to clarify and take any confusion out of closing.